Investing in stock for beginners in 2022. Investing is a way to set aside money while you are busy with life and have that money work for you so that you can fully reap the rewards of your labor in the future. Investing is a means to a happier ending. Let's say that you have $1,000 set aside and are ready to enter the world of investing. Or maybe you only have an extra $10 a week and you'd like to get into investing. In this article, we'll walk you through getting started as an investor. Before you commit your money, you need to answer this question: what kind of investor am I? When opening a brokerage account, an online broker such as Charles Schwab or Fidelity will ask you about your investment goals and what level of risk you're willing to take. Online brokers. Brokers are either full service or discount. Full service brokers, as the name implies, give the full range of traditional brokerage services, including financial advice for retirement, healthcare, and everything related to money. They usually only deal with higher net worth clients and can charge substantial fees. Robo-advisors. After the 2008 financial crisis, a new breed of investment advisor was born, the robo-advisor. John Stein and Eli Broverman of Betterment are often credited as the first in the space. 23 Their mission was to use technology to lower costs for investors and streamline investment advice. Since Betterment launched, other robo-first companies have been founded, and even established online brokers like Charles Schwab have added robo-like advisory services. According to a report by Charles Schwab, 58% of Americans say they will use some sort of robo-advice by 2025.4. If you want an algorithm to make investment decisions for you, including tax loss harvesting and rebalancing, then a robo-advisor may be for you. Also, as the success of index investing has shown, you might do better with a robo-advisor if your goal is long-term wealth building. Investing through your employer. If you're on a tight budget, try to invest just 1% of your salary into the retirement plan available to you at work. The truth is you probably won't even miss a contribution that small. Work-based retirement plans deduct your contributions from your paycheck before taxes are calculated, which will make the contribution even less painful. When you're comfortable with a 1% contribution, maybe you can increase it as you get annual raises. You're unlikely to miss the additional contributions. If you have a 401k retirement account at work, then you may be investing in your future already with allocations to mutual funds and even your own company stock. Minimums to open an account. Many financial institutions have minimum deposit requirements. In other words, they won't accept your account application unless you deposit a certain amount of money. Some firms won't even allow you to open an account with a sum as small as $1,000. It pays to shop around some and check out our broker reviews before deciding where you want to open an account. We list minimum deposits at the top of each review. Some firms do not require minimum deposits. Others may often reduce costs, such as trading fees and account management fees if you have a balance above a certain threshold. Still others may offer a certain number of commission-free trades for opening an account. Commissions and fees. As economists like to say, there ain't no such thing as a free lunch. In most cases, your broker will charge a commission every time you trade stock, either through buying or selling. Trading fees range from the low end of $2 per trade but can be as high as $10 for some discount brokers. Some brokers charge no trade commissions at all, but they make up for it in other ways. There are no charitable organizations running brokerage services. Depending on how often you trade, these fees can add up and affect your profitability. Investing in stocks can be very costly if you hop into and out of positions frequently, especially with a small amount of money available to invest. Remember, a trade is an order to purchase or sell shares in one company. If you want to purchase 5 different stocks at the same time, this is seen as 5 separate trades, and you will be charged for each one. Now, imagine that you decide to buy the stocks of those 5 companies with your $1,000. To do this, you will incur $50 in trading costs, assuming the fee is $10, which is equivalent to 5% of your $1,000. If you were to fully invest the $1,000, your account would be reduced to $950 after trading costs. This represents a 5% loss before your investments even have a chance to earn.